Hello, hi, it's Adil, bringing you a review of the FTSE 100 from an intermarket analysis perspective, going into next week's trading, which I think we do start the month of December on Monday. So, if I'm correct, yes, our Christmas isn't too far, and nor is the new year, and 2014 gone, 2015 arrives. Okay, right. So where are we? Okay, so basically the theme or the recurring theme that's going to be in my video is going to be OPEC. Okay, it's all about OPEC. As we all know, with regards to the FTSE 100, it's heavily weighted towards commodities. So whichever way commodities go, obviously given the fact that oil price has fallen, copper and gold took a dip as well. Okay, and especially with regards to oil falling another $2 or $3 late in the session, gold prices falling as well. So these are all issues, or basically this is the main concern or recurring theme. It's also going to be about risk off for the FTSE 100. Now, with regards to other indices, not as much. Hence the reason why you're seeing the Nasdaq continue higher, the biotechs and the semis all move higher. Okay, and with regards to European shares, obviously moving much higher, especially with regards to DAX with the assault on 10,000. Okay, although that is going to find some resistance given the anti-QE statement over the weekend. If you look at my Twitter feed, you'll realise who actually has said that. It's one of the what was her name again? Yes, it's quite a hard name to pronounce. ECB's Lawton Schlager. Okay, threshold as I see it for taking further action is very high, particularly for large-scale purchasing programs. Okay, so anti-QE. Any anti-QE statement is going to knock the European indices back. Okay, because it's all about the Kool-Aid. Will obviously send the euro higher. Okay, and certainly does not bode well for Europe. Although having said that, cheaper oil prices obviously reduce the cost side of the equation. Okay, but there also the other concern that they have then in Europe is the fact that they are going to remain within the deflationary spiral. Okay, but that's another topic. I'm not going to digress. My recurring theme, like I said, was going to be the falling commodities, and that's going to be hurting the FTSE 100. Okay, anything else other than that, we'll have to see with regards to the Asian session come Monday, and obviously European US session, and we'll take it from there. But my perspective will really be about obviously focusing on the theme that commodities are going to hurt the FTSE, given the fact that FTSE is heavily weighted towards commodities, and therefore we're going to see a move lower. So if that's the case based on the fundamentals, then all I need really now is just to align my technicals. Okay. Now there is something I did want to show you if I can hopefully find it. Come on. Okay, I can't find it. Okay, the FTSE fact sheet just proving to you how commodities the FTSE is heavily weighted towards commodities. Okay, so right, now let's have a look at the technical chart now. Daily chart, okay, we had an inverted head and shoulders formation. You had the neckline at 6420, 6075 head. Projects a target around 6770, 6760, around that region. Okay, we've obviously hit that. We had a bull flag formation. Obviously, we had this green candle here on the 21st. We've been consolidating, and we actually lost the lower. Whenever you see a green candle and it loses the lower level, i.e. there, okay, so the lower body basically, which means that the bulls obviously had bought the FTSE from here to here, and obviously were consolidating for the next move obviously being higher. Now, given the fact that China was higher on a Friday, quite considerably, given the fact that we've had a Chinese rate cut, obviously that sent China higher, okay, and yet still that hasn't helped commodities, and yet still China higher hasn't helped the FTSE higher. Why? Because obviously commodities are focusing on the supply side of the equation, excess supply, and obviously it's being forced lower. So basically the scenario here is that this is a failed bull flag. Whenever you have a failed bull flag pattern, i.e. there's no catalyst that can really propel it any higher, because this move here has already been factored in. All the bullish news really is this is priced to perfection now, and price action is telling you that there's exhaustion. So a failed bull flag equals an emotive move in the opposite direction. So that's exactly what I'm expecting come Monday. A move in the opposite direction for this lower body level to give way at 6680. Once that gives way, then it opens up 6640, and then it opens up 6560. Then we'll see. Okay, hopefully I'll be able to give you better levels in the smaller time frames. Okay, so that's basically the gist of my analysis. Okay, that we are heading lower. We have a favorable flag pattern on the daily chart. Let's have a look at its peers. Okay, so with regards to the FTSE 100. Okay, so FTSE AM All Share Index negative. Okay, we had a negative day, and we seem to be our higher high isn't exactly very convincing. Okay, the next indice, FTSE 350. Okay, again, same scenario here. We almost gave way to the lower body, and we just about survived. Okay, and we actually pushed higher and created a bottoming tail there. Okay, so even though we do have an inverted head and shoulders, and this is obviously expecting it to be higher, this market still remains into resistance at present. Why? Because of commodities. Okay, and that's going to keep the FTSE 350 at bay as well. The other factor that we're going to be focusing on now is going to be the FTSE 250 as well. That's another variable that we're looking at. Okay, so the FTSE 250 is into horizontal resistance. Now, like I said, the 350 and 250 do rely heavily upon the price of sterling. So let's have a look at sterling and see exactly what's happening there. Now, sterling obviously did break out and has now come back into line. And as you can see here, based on sterling, we are into support. So if sterling is into support, that means that those indices are going to be in resistance, given the fact that the intermarket analysis holds true. Okay, so we're into horizontal support here, horizontal support here. Okay, and that's basically where we are. So if sterling is into support, that means FTSE is into resistance, and vice versa. Okay, so that adds argument to the FTSE top being potentially being put in place. Okay, now let's have a look at the dollar index just to confirm the weakness in the dollar. And obviously, as you can see here, 10-minute chart, you've got a bear flag formation. Okay, a 60-minute chart, you are into resistance, horizontal resistance. Okay, and daily chart now is obviously again into horizontal resistance. So we did have a bear flag formation, but it hasn't really accumulated or come into fruition. Okay, but certainly worth observing, especially on a 60-minute chart. We are into horizontal resistance, and obviously that itself bodes well for sterling to push higher versus the dollar, given the fact that that's into support. So dollar into resistance, sterling into support. I think that sort of explains everything else to you. Okay, now let's go to FTSE volatility index. This is very interesting. Okay, given the fact that it's into horizontal support, it's similar to the VIX. Okay, very similar to the VIX. And I'll look at I'll explain the Japanese yen shortly as well. Okay, so let's go to our volatility index. FTSE volatility. Okay, so FTSE volatility index is now into horizontal support. As you can see here, you've got bottoming tails here. Okay, all these bottoming tails put in. Okay, and daily chart certainly clearly shows you that we are into support. A 60-minute chart again into horizontal support, and obviously that has an inverse relationship with the FTSE. As you can see here, when we sold off here, we were moving higher, and vice versa. Okay, so very important. Now the next factor that we're going to observe, okay, is our smaller time frames. Okay, actually before I focus on smaller time frames, I'm just going to give you an intermarket analysis perspective with regards to our European peers. Now the German DAX in a daily chart has a hanging man. A hanging man at resistance obviously confirms that the FTSE is going to reverse as well. Okay, so very important to understand it from that perspective. Now that obviously adds an argument to the FTSE reversing as well, because Germany is obviously the leader in Europe, and if the leader is weak, then the FTSE 100 will also be weak as well. Now let's look at the smaller time frame with regards to the FTSE now. Okay, so 60-minute chart, we have this H&S formation. Okay, so first of all, we had this H&S formation on I explained my last video, 26th I think it was, or 27th or 28th. I explained that we had a H&S formation on a 60-minute chart. We obviously put in a double top, right shoulder, and obviously given the fact that Commods had fallen, i.e. oil had fallen, OPEC, etc., and obviously we had quite a substantial sell-off. Once we closed the gap below, then obviously the FTSE rallied and moved higher. Right, so where does that leave us now? Now that we know that H&S formation obviously has hit its target, we can get rid. Okay, and all we do now is we focus on this symmetrical wedge pattern here. So if I just draw this for you, okay, so we're obviously in the lower level of this symmetrical wedge. Okay, so as you can see here, we had this symmetrical wedge pattern, even a H&S formation. You can argue both sides from a technical basis, and now we're retesting the previous breakout level. So we're retesting the wedge breakout level. Okay, and also if you use your Fibonacci sequence here, you know you're into 75% resistance. Okay, and obviously previous support equals resistance as well. So if I just draw your trend line here, or diagonal line there, as you can see there, previous support equals resistance, and retesting a symmetrical wedge breakout resistance. So there's 2 or 3 arguments there for a resistance, okay, on a 60-minute chart. And given the fact that we now have from a larger time frame, or larger time, but zooming out slightly, you can clearly see that there's an H&S formation. So if I were to just draw this in for you now, there's your left shoulder, there's your head, and now we're putting in our right shoulder, which is in the fib 75% diagonal trend line resistance, and down we go. So then we ask ourselves as individuals, are there any gap levels below? Yes, there are. There's a gap level below here that's very crucial, which is around the 6450 level. So technically a 300-point move based on oil price obviously selling off as well, and obviously US markets have been floating higher on light volume, etc., etc. So this is forecasting quite a substantial sell-off. Ooh, okay, excuse me. Still very tired. Trying to catch up on all the week's sleep. Okay, so what is the projection here? Okay, so the head is 6775. So let's write this. Let's get this drawn in now so that we know. So 6775 minus the neckline. The neckline obviously is going to be 6655. Let's just do it for easy calculation here. Okay, it's around the 6650 level. Okay, and we're projecting that move lower now. Okay, so we're looking at 6535 if I'm correct. Okay, so here we go. Right, so there's your IHS, or H&S should I say. Okie dokie. Right, H&S 6775, 6655. Okay, you're looking at 6535, so 120-point move to lower. Okay, so that's your H&S formation. So watch out for that, folks. Okay, so having said that, obviously the markets. I mean, we can't project or we can't superimpose where we expect the markets to go. They'll go where they want to go, and they'll react to what they want to react. Okay, and we just have to go with the flow. So horizontal support is going to be there. Okay, previous resistance equals support is going to be there. You have 200 MA as well. So watch out for that 6620 level, okay, going into next week on the downside. But yes, we are certainly going to get a flush, easy 100-point flush come Monday, especially with regards to the actual oil price and gold price falling in late session Friday. Okay, that's basically where we are and where we stand, okay, with regards to the 60-minute chart. Let's have a look at the smaller time frame again. So 10-minute chart, you've diagonal trendline resistance. Obviously we hit the top there. That's 66735. We've obviously holding the 75% fib resistance as well. Okay, and this next higher high certainly seems to be circumspect. So just watch out for this potential rising, expanding, contracting wedge pattern, which generally tends to be bearish. Okay, and don't be surprised if this breaks lower. And looking at these levels here, so you have a level here, previous resistance equals support at 690, then obviously your pivot S3 support and double bottom support there at 6670. Okay, once that goes, then we'll see, but we certainly are in a bearish channel on the 10-minute chart. Okay, so hopefully that gives you an insight. Now let's just bring up a few sector analysis. Now the pharmaceutical sector certainly has moved its way higher. Has failed the H&S formation. Okay, you do have an unfilled gap below, so that again will act as a magnet, and we are into horizontal resistance, okay, on the daily chart. Let's have a look at the banking sector. Banking sector certainly didn't make its move higher and ascended, okay, and you've got this gap level resistance here. This is the level that we're looking at potentially for the banks, okay, and you do have obviously this is an old formation here. You do have, let's just have a look here. So you certainly have resistance around this region here. Okay, so certainly into our potential horizontal resistance. So that's something that we keep an eye out for. A 10-minute chart, certainly double top intraday. So we'll see how that performs. Okay, so certainly resistance there on the smaller time frames. Oil sector, as we all know, this has been absolutely clobbered. Okay, it is into potential double bottom on a 60-minute chart, and it has put in a potential bottoming tail. But given the fact that oil price obviously has descended again, that is doesn't bode well, and potentially this may well break and obviously move lower as well, which in turn is going to send the FTSE 100 lower. So that's something that we're going to keep a very, very close eye upon. Okay. Retail sector, as you can see, we are into pivot R3 resistance, and certainly is into potential resistance here on the 60-minute chart. Although it is certainly bodes well in terms of higher oil prices, or sorry, lower oil prices, obviously helping the consumption, or increasing our disposable income. So obviously retail certainly benefits from that perspective, but it certainly has found some potential double top resistance, and obviously into pivot R3 resistance as well. So that's something that I'm going to keep a close eye on. Obviously if it continues its ascent, then I will have to potentially change my bias, but for now it certainly all does seem to be in resistance, and given the fact that FTSE is heavily obviously tilted towards Commods, that will basically be dictating price action. Telecoms have been moving higher because of the bid from BT, EE and obviously O2, something to keep an eye out for. Hotel and leisure sector, travel and leisure, as we all know, given the fact that you have a lower oil price, that obviously helps the travel and leisure sector. Mining stocks obviously have been moving lower. We have closed this gap below, and we are going to test the lower levels, given the fact that we've had the gold price move lower, and obviously copper is moving lower with oil. As you all know, intermarket analysis states when one commodity is weak, then it generally tends to force the rest of its peers lower with it as well. Now China is the only exception here, given the fact that we've been moving higher, and certainly that's not having the desired effect there either. Okay. And the EU volatility index is approaching gap fill support, is into support as well. Given the fact that we've had anti-QE comments out of European, one of the ECB members, that obviously doesn't bode well. This is looking for a potential here for inverted head and shoulders on the volatility index as well. So there's your left shoulder and your right shoulder, and obviously there's your left. Now we're potentially looking for a move higher. So that's something that I'm going to keep a close eye on going into next week. Okay. But overall, FTSE 100, like I stated on a 60-minute chart, certainly seems very, very vulnerable. The test will really be, I mean, if we go back and test this, but once we go back and test this level here, which is a 6670 level, if that breaks, then like I said, 6620, and then we'll see. We'll have to reassess from there, okay, and see exactly what's happening. If the oil price starts to obviously gain some support and starts to move higher, then obviously that will help the FTSE, and then we'll have to reassess and see exactly what happens. But from my perspective, anti-QE comments out of Europe, obviously oil price falling and gold falling, commodities falling late Friday session. From the outset, we are going to see weakness. What happens thereafter will be based on obviously economic news flow, data, policymakers, central banks, China, Europe, and the US. Okay, so as a day trader, there's only so much I can forecast, and my time span and my analysis generally is within that 24-hour time zone, especially when I do this analysis, because I'm a day trader. Okay, so I'm only looking at variables on a day-to-day basis. By the time come Monday morning, Asian markets could be flying higher. Nikkei new high, USD JPY high, USD JPY higher. Yen pairs obviously making new highs. Strong news flow overnight. China could obviously potentially have cut their interest rates again, and all my analysis is invalid. Okay, so you just have to realize that the market is basically the one who decides which way this price action will go. Technical analysis can only do so much, okay, and fundamental analysis is very limited in its time horizon. So that the analysis or information that I have now, if this information remains, and there's no additional information that will obviously shift the bias in any other direction, then this analysis holds based on fundamentals. Obviously, if we see a spike higher on commodities, for example, based on a Chinese rate cut, then my analysis and my thought process will certainly have changed come Monday as well, okay, given the fact that we've had a move over in Asia. So it does depend heavily on that, okay, but given the way this analysis is at present, this is the information I have at hand, so I base my trading decision on the information at present, and obviously based on the charts that I'm observing as well. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.